Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here on March the 18th, 2020 with a daily Forex market analysis for you and live trading webinar, and we are going to have a lot to talk about today with what's going on with today's current market action. Right now, we just want to have our disclaimer for you first to remind you that this webinar is for illustrative and educational purposes only. All trading examples and things and analysis that we're coming up for is just to get you an idea of direction and educate you on how to look at the markets. So all trading examples, this is all in a delayed, so you can't try and chase us. Please don't do that. Never try and chase a trade. Always have a plan, know what you're doing. Unless you're subscribed to our signal service, you don't need to try and copy what we're doing, because you don't know when things are changed or when we get out of trades or whatever. So you just need to be mindful of that. So if you subscribe to our channel, though, you can follow our videos and learn more about our signal system, and then follow them if you want. But now let's go on to our live action screen here. We have the forex-trading-unlocked.com website pulled up, and we are now going to toggle down through the economic numbers, because economic numbers right now, even though they do matter, we still have way too much going on with volatility to worry ourselves about them. So we have the US dollar Swiss pulled up first. Why do we have this one? Well, the dollar is on a rampaging bull move going on today. It pulled back a little bit after yesterday's rally, and then that was just a little profit taking before the US dollar bulls started their stampede once again. And the US dollar is a flight to quality currency, as we all know, but so is the Swiss. But we have gone from, what was it, back on March 9th, so in 9 days, of which we have a weekend in the middle of that, so 9 trading sessions, we went from a low of 91.82, and we are now pressing 97.17. So that's over a $6 move in 2 weeks. That's a very, very big move. We could be at parity with the US dollar Swiss in no time, or we can run out of gas. Maybe the dollar is going to exhaust itself. But right now, if you are a bear, I would say you really got to be crazy, because don't risk more than where you're at already, because who knows how far this thing's going. I would wait for a very valid signal. If you're a bull, which we are, we have, the reason we pulled this up is we have a US dollar Swiss is greater than 95.25 binary strike price. That's this brown line right here. As you can see from the Nadex platform, we have purchased this. We have 2 days left. It was purchased on the 17th, so that was yesterday. The trade is profitable, so the US dollar Swiss is greater than 95.25. So what does that mean? So 95.25 means that anything, if the market settles above this on Friday, then the option expires in the money and is a profitable trade. Only if the option expires below this strike price does the trade become a loser, which we still have the time to get out of it any time before then. It is already a profitable trade. But we're running with this that we don't think that the dollar is going to have a big sell-off that quickly. Right now, I think the dollar is a bull. It has bounced back very, very strong over the past couple of weeks versus how, remember, it was in a big slide. Look at how it was pressuring new lows. I mean, the Swiss is a bull no matter what, I think, versus most currencies. But right now, the dollar is the king. Now, I think that as we still continue to press higher and we get closer to parity, then the US dollar Swiss is going to start to have a little bit of a problem. But it will still be bullish versus probably the rest of the European currencies. And I think that because of the coronavirus and the lockdown in the EU, I mean, you got to remember, Switzerland is now isolated as well in the EU. So, and it's a very small country. Obviously, it's a fluent country, but it has lots of economic resources. But that doesn't mean that it doesn't come at a cost. So, but right now, the US dollar bulls are drifting this market through the new highs just as we are speaking here. So right now we have that one trade on, and we also have it long from 94.67. We already have our profitable stop in here at 95.5. As you can see, this trade is good. We also have a short euro and a long Canada. We'll get into those later. So right now, the US dollar Swiss, where we're long in the Forex cash as well as the options market, we're not in the futures or futures options. mainly because of option expiration coming into play right now. So pricing gets a little bit rough. Not that liquidity isn't there, but there's a lot of spread tradings, which offsets. As people are rolling out of spreads, it causes a lot of disproportionate moves in certain months, especially the front months and especially in the options contracts. And then when you throw in this volatility, well, that makes things very, very difficult. So you can see we have this 93, 94 pivot, this blue line here. This is our directional pivot, which is below our strike price and from where we are long. So this is anything above here, we're looking to stay neutral to positive. Only below there will be obviously become bears, as this market would be, even with this volatility, looking to probably probe new lows, which could still happen. Don't remember that the US dollar is a flight to quality, but so is the Swiss. So as the European currencies continue to fall against the dollar, if this trend should maintain itself, the Swiss may be the first one to fall off and start to gain strength again. The dollar may have a little bit of an issue once it starts to get close to parity. So don't think that this thing is going to rocket up to like $1.20 or something like that over the next couple of months. Not that it couldn't anything happen, but it could also be below 92 cents again in the next couple of weeks, if not the next few days with this volatility. So definitely be mindful of that. So we have our first trade here that we're monitoring and we have been working, and today we'll adjust our stops even higher again, and then we'll be one day closer to expiration. And then tomorrow, should we have some exacerbated move back towards like the strike price, then we might get out of this trade. But for right now, there's no reason to, and especially if we have follow through to the upside tomorrow, then the odds are pretty good that Friday the option will expire in the money, so, and be a good trade. So we'll continue to monitor that over the next couple days. You can watch our videos and see how it goes. Now let's go to the euro US dollar. So we know that the dollar bull is raging, and the stock market in the United States has been playing with its lows all morning long, at least from the onset of the beginning of the trading day. The euro US dollar is in a free fall itself. So we are also, as you can see, we are short that from 111.45, and we have a stop in at 110.80 right now. So we're looking to maintain this short and lower our stops for a little bit longer, and we'll see how long this slide goes. But as you can see, we're coming back towards this. I mean, we bounced off this low very quickly on February the 20th, and here we are 1 month later. We had a low of, let's see, 107.84, and right now we're trading 108.57. So we're less than a full dollar away from the low that was set just 1 month ago. And look at the volatility. We went from, like I said, the low here is 107.84. The high was 114.95. So that's very, very steep as far as the activity to the upside and then rip back to the downside. So as far as, is this market going to be a bull again, or maintain its bear, or just become neutral? I mean, neutral can mean just a very wide sideways trade. I mean, look at this. We've had more of a range in the past month than we've had in the past year and a half. So this is something to be very mindful of. So if you're trying to be a buyer here, I would definitely wait for a signal. I would think that you're got to be in a sell rally forecast, but keep it tight. Just like we're already in the trade and we're lowering our stops. Once we're out, we're going to probably be out of here for definitely a little bit as we wait to see how the markets calm down or do not calm down. So the trends may continue to be super extreme and severe. Who knows? The bond market is something that we have to start watching and paying attention to. As yields go up in the midst of rate declines and the anticipation of yet even still more obviously quantitative easing and the potential for more rate cuts around the world. These are all things that affect the currency markets. But right now with Europe in the complete shutdown, I think that the euro, which is the biggest component of the dollar index, is one of the main reasons why this obviously the index is going higher, and all the currencies are falling to the dollar right now. So this is a big move again today, and I think as long as we are under pressure and potentially make newer move lows on a multi-month level, that we will see the dollar index continue to run for sure. I think the dollar index is going to be a big reflection of the euro. If we get some stability here in the euro, then I think we'll start to see the dollar index run out of gas and maybe see a correction in the dollar. Not that it's not going to happen anyhow eventually. So, but right now the momentum seems to be very forcibly US dollar strong. So, and if you're not in the trade already, like I said, I think you should wait in the sidelines and then think about getting in. And one of the reasons too is, like, let's just look at today's range. We had a $1.1045 is the high, and the low is $1.840. That's a $2 range, and actually getting low, being extended. So that's just for today. A $2 range is something to be very mindful of. I mean, intraday traders, I know that you're probably loving the fact that you're catching some moves now, but I'm sure you're getting crushed on a lot of moves as well. So it's not. This is something you have to play more in the long term, and once you're in, you got to manage it well, and also be very mindful of your risk. You have to be You cannot be. The smartest thing for money management and capital preservation is to not be trading at your normal levels and to cut back on your size, just to make sure, because the volatility is just insane. You're going to maximize your returns on trading with less, and you're going to preserve your capital in the event that you have some very erroneous market swings that go against you, especially if you're trading over the weekend when the markets are closed. That's why options are still a very safe bet when you're buying them, because of the you know exactly where your risk is at, or even with binary options, you know where your risk is at when you sell them as well. So with futures options or equity options on ETFs and things like that with the currencies, please be careful about selling options right now. If you're going to sell options, make sure you do it something like in a credit spread, where you know your risk, no matter what, is capped. So you start out with whatever credit you can get, depending on the volatility in the market you're looking at. But then, outright selling like calls and puts right now, I think you got to be very, very careful with this volatility. It's too easy to get creamed. So unless you have very deep pockets. So that's the other mindful thing. If you have deep pockets and you're obviously an experienced trader, then I'm just reminding you something that you're probably paying attention to right now, so as the rest of us are. So right now, as we are speaking, we are making new lows, so we are bearish and things are looking good with that. It's too bad we didn't sell any options in the binaries at the beginning of this week, but with this volatility, it was too uncertain on Monday as far as the risk level with the pricing on those. So now let's go to the British pound USD dollar. This is the other big weight in the dollar index, and this one has seen what a break this one has had. We have had the British GBP. Got it reversed here. GBP US dollar. Okay, sorry about that, folks. So now we have the pound US dollar that we're loading up. Now this has been a crazy bear. I mean, look at this. Over the past few months, it has completely went from being a nice bull that tapered off into a grinding neutral, maintaining strength against the dollar, not losing to the dollar, but not gaining on it either, but holding up in a nice pattern for months. But then over the past couple months, especially February, lower move lows and lower move highs are indicative of what? A lower moving trend. And we tried to spike higher. And look, we had this right here, the signal right here, the sell signal. Like, talk about one of our high probable Japanese candlestick pattern sell signals right here. This bearish engulfing line right here, what a sell signal. Like right here where our pivot right now is for our directional pivot, this was our target zone right here, and it blew through it. I mean, it kind of tried to hold it, spiked in through it, then kind of bobbled around, and then obviously, as you can see over the past couple sessions, as this unloaded. I mean, this market has gone from a high of, look at this upside pivot, $1.3203. We're trading $1.1764 right now. That was on March the 9th. Remember March the 9th? We mentioned that in the other market, in the Swiss. Here we are 9 days later, with a weekend in between, two trading weeks apart, and every day is lower and significantly lower. So does that mean it's continue to slide at this rate? Absolutely not. It may, but the velocity of this slide is extreme, and markets go out like they come in. So, and especially with the currencies, this is not an equity market. It's not the stock market. So eventually we will see stabilization points and no matter what, correction. So not even if the dollar remains a bull, it's going to have some sort of bearish correction. So but right now, if you look at the pound, let's see, the last time we were down here, we bounced. That was in September. We had a low of, what was it, $1.1958. So we're below the September low. So that's a big deal. And the fact that we're most likely going to settle close there today. I mean, we could obviously turn around and even be higher on the day with the way things are going in this world. Everything's happening so fast right now. But I think this is pretty much due to the fact that the EU is now in a total shutdown. So that means obviously the UK is shut off too from them, as well as us, and except for trade and certain things. But as a whole, everything is getting. Yeah, we're going into a global lockdown. So, and this is a big deal for the major currencies. So they are adjusting right now, and then eventually they will stabilize. This is not going to be something that's going to happen forever. We're not going to pile drive it down to zero. But not that this couldn't even go to parity. Who knows? But I'm not calling for such an extreme thing. I think we have a lot of irrational moves happening right now. I think social media has driven a lot of this trading where people are panicking on such an extreme level, and markets are a reflection of it. Remember, markets are a biorhythm of the world, so, and the currencies definitely are as well. So we are seeing how things are going with this, and yeah, we'll just have to be mindful. This is another market that has very wide spreads, and when it moves, boy, the pound moves. This is for experienced traders with very strong capital management and discipline about as far as a trading plan, because if you're not executing properly in this market, you're going to get chewed up with the volatility, and especially it can turn on a dime so hard against you. So, and especially for over weekend risk with this right now, you got to be very, very cautious. So, yes, the signal was great, but now with volatility at the levels it is, please be making sure that you're scaling back on your trading to make sure you can withstand the swings. And just think of the fact that even though you may not be making as much money as you think you would like to with the level of trading you're used to trading, you're going to be making so much more on a little than you would. And also, your losses won't be as exacerbated because, believe me, the losers are just as crazy as the winners in this market because the risk levels have gone up. I mean, now you have to be widening out risk, which means you can't be trading the size you had before. You have to tone down on either your size, the number of contracts, or the number of markets that you're trading. So otherwise you're going to run into risk of margin calls, and that causes all kinds of other problems. So you already have a pandemic in the world. You don't need a panicdemic in your trading account. So please be mindful of that. So all right, let's go on to another one of our trades that we have. We've looked at the Euro US dollar and also the US dollar Swiss, that we are long the Swiss, US dollar Swiss, and short the Euro US dollar. Let's look at the US dollar JPY. We have US dollar JPY is greater than 106.75 binary option strike price. So that's a strong account. That's short the euro. All right, US dollar JPY. We entered this also on 2 days ago. Or excuse me, yesterday rather. There's 2 days rather to expiration. Right now, this one is in the money. The strike price is 106.5. So that is this brown line right here that's going across the page. And the market is currently looking to press new or move highs and to staying above this strike price. So we can get out of it if we wanted to. We are going to wait, especially today if we close, even if we don't close above this high, which is here at 108.58, this pivot here. If we close above this downward sloping resistance line, this is our first line of resistance. We're trying to figure out if this trend is this in a correction mode or is it really starting to become a real big bull. With dollar strength right now, I think that you have a really good chance, because this market had been in a grinding bull or bull market for a very long time. Yes, we've had a drastic sell-off, but things have been very, very extreme. So if dollar strength really is something that we're going to be looking at for the next couple sessions because of what's going on with all the bailout stimulus packages that are coming out of the U.S., then there's a good chance that we could see the U.S. dollar yen back up around that 112 half area where we had just fallen off of. And we had a longer term target of 113, and our target actually was like sometime in April. So if we continue to just trend a little bit higher slowly, even, we have a good chance at hitting that. Or we could be running out of gas. If the dollar starts to turn around, then there's a good chance that we'll see the U.S. dollar yen fall apart again. But right now we are playing the long side with the options, not in the futures or the futures options or the Forex derivative cash market. We are just in the binary. So we are long above 106.75, looking for a closure above that. Now, if tomorrow we have a turn back towards support, it is what it is. But if we get a nice rally tomorrow, and then it looks like if Friday starts to get a little weak, we may just get out of the trade early and just take the money and run. So pigs get fat and hogs get slaughtered. So just in case, because with this volatility, the yen could be, just over the past couple days, the ranges, today is actually pretty tight. In fact, our low of our today was right around our strike price, ironically. And of course, we're looking for a breakout to the upside to benefit us. So we shall see how that happens. Now, here's something to think about: is in that trading zone, we have the yen, which is a flight to quality currency. So that's one that definitely has a little bit of divergence from the dollar at times because of that. But for that trading zone, look at the Australian dollar, US dollar. Here's another one. If you're not already short and your risk has obviously got to be wide because of this volatility, I would be very cautious with this one. I would really wait for a signal if you're looking to buy it, and I would be cautious with any directional trades, whether you're in the futures or the cash Forex market. I think that with binary options or futures options, you have some trades for sure, some credit spread opportunities, and some buying and actually out of the money calls and puts. There's all kinds of things you can do with this kind of market. So, but the main thing is be very careful if you're going to be trading with the futures or with the Forex cash market, because the ranges are so big, and right now the risk is your reward to risk ratios are diminishing. So there's more risk on the table than reward. So be mindful of that, and until it comes to a point that you can start jumping in with certain derivatives or certain contracts or even ETFs or whatever. Be smart, and just wait it out. If you're not already in the short trade from way above, then getting in now is a very dangerous thing. But then buying also is too. So be very mindful. If you're going to play those things, use the tools that you can benefit. So if you are right, you can also maximize your risk reward, and versus where now you're kind of, it's tough. You're even if you normally would be getting X reward to the risk you're taking, if you're right, probably not going to happen now, especially with this volatility. All we have to do is go back to this one day right here where we have where our top pivot here point is at 66.89. Look at where that market opened. Look at the high of the day. Look at the low of the day. Look at where it settled. Tell me how you would have fared on that day, depending on whether you were a bull or a bear. So, now we have the New Zealand dollar, US dollar, also in this trading zone, which is on its butt too. This is in the gutter. We have nothing to say except our upside breakout pivots are 61.53 here, and a high above that 64.54, but we don't see them being seen anytime soon unless there's a true correction in the US dollar. But I think right now we're set up to at least pound this market and most of these other markets for the next day or so. Let's see how things continue to pan out in the US. The more actions that are taken, the more things are coming clear and the more comfortable and stability. The funny thing you have to watch is the VIX. The VIX has started to actually come down for the US stock market, ironically, with even it banging new lows today. So, but what that means, volatility has gotten so extreme that now, even though people they're not used to it, the market's used to it, and as it becomes used to it, it starts to diminish. So as that starts to break down, as the VIX starts to drop, so will the ability for people to gauge volatility, because they start to see the VIX drop. They're like, oh well, if the VIX is dropping, volatility is going to be dropping. So that's when all of a sudden people start looking to take profits quicker. They're not looking for big extreme moves, and we don't have this over reaction that we have currently going on, at least as my perception in the market. So now let's look at the US dollar, Turkish lira. Why are we looking at the US dollar, Turkish lira? Well, this is kind of in the middle of a hot zone it's near India. The Middle East has a breakout of the coronavirus. We don't know really how bad it is. So our pivots are literally the high and the low of yesterday. We made a higher move high yesterday. We settled lower on the day. But today, as you can see, we are reversing gears. So the potential sell signal that we had going on in the US dollar, Turkish lira doesn't look so good anymore. So right now we are still a bull, looking for this thing to continue higher. We talked about this months ago already, that this bull could keep on raging for the next few months. You just got to have really deep pockets. So, the corrections here, just look at 2 sessions ago, the range that we had. We had a range where the high was 44, and the low is 627. That's a big range for the Turkish lira. So like I said, this one here is a major bull. Please stay at sidelines with this one. This is a real tough trade unless you got deep pockets and you know what you're doing. And I'm not saying like, I mean, this thing could still go, this thing can go double in price. I mean, look at how this thing has gone. It's gone from 57. Let's see, back in November, we were at 5.7, and now we're at 6.4. That's a big move, as you can see. This trend is a bull. It's in place. So be very cautious trying to sell into something like this. And there's a lot of volatility here. Speaking of volatility in a bull, the US dollar Mexican peso, talk about a time to go to Mexico if you can still, I'm sure you can get some travel deals, that's for sure. But look at this, as we're talking right now, the peso is trading at 23.70 pesos to the dollar. That is quite, excuse me, the exchange rate for the US dollar Mexican pesos. I mean, considering that it was at 18.5 just a month ago. So anyone that's down there right now or going down there right now, talk about a time to go. You're getting a great deal for sure. Everything that you're doing is costing you, well, definitely 10% less for sure than it would have had you gone a month ago. So good for you. Hopefully things stabilize in this market too. This is one. How high can it go? Well, that's a good question. This one starts to get really crazy, is how extreme can the US dollar pressure certain currencies. And that's where we might come into some really big things where, you know, as the dollar may, like we started out with the Swiss, and that's like why we did, because the Swiss and the yen can have reasons why the dollar, even though it's raging against other currencies, they're flight to quality currencies where their buying pressure may be enough that the dollar cannot gain on them as much, you know. So that's pretty much where I think the situation that we're in right now, that currencies like the peso or the Turkish lira, that they have the ability to, or even like the Australian dollar, the New Zealand dollar, there's a lot of extremes, you know, like the outbreak is not as bad in Australia, but it doesn't matter if they have no trade. I mean, they need money flow, and then things, if there's not selling goods to China to be manufactured, you know, these things hurt them, you know, plus with the airlines shutting down and their bailout, you know, like they're not, so far they haven't said that they're going to help Qantas. So they may be prepared for the virus, but they're not prepared for their economy to bail them out. So these are things that certain currencies could trend radically. Like, are we going to see 30 pesos to the dollar? If it's very possible. We could also be back like this pivot here at 21.35. With this volatility, we could be back here in just a couple days. So we'll see if things stabilize, especially once they start to stabilize. I think you're going to have a big, big retreat, and a very quick retreat. Markets go out like they come in, but right now with this volatility and this extremeness of how things are going, we just have to ride it how it is, and then we'll see how things go. But I think right now you got to be very cautious. If you're a bull, keep hopefully you're raising your protective stops as the market goes higher, and eventually, you know what, you'll probably be out and waiting for a selling opportunity or stability to come into the marketplace. And as far as being a seller right now, I would be very cautious with this one. So now let's go to the US dollar, Canadian dollar. Let's go north of the US border, which, speaking of borders being closed, those are now closed too. Those is closed today. So today we have a big rally going on in the US dollar, Canadian dollar. So our downside pivot is the low from 2 sessions ago at $1.3719. We have a gap below there to fill. Are we going to see that anytime soon? Well, we could, but right now I think this is going to continue to press on as well. For how long? I don't know, but I would say that we probably have to consider that this dollar rally that's going on may last for another month or so. Now, when things turn, remember, the dollar will turn around in a big way, and that could also be in the midst of credit market collapses and all kinds of other stuff. So we may survive the flu virus, which I'm sure we will. It's going to still be bad. We have a lot to get through. But as we start to come back online, how things come back line, we may start to have people coming back to work, and all of a sudden everything is working and things are going well, but the credit markets may explode. They may explode. There's definitely the potential, even if they keep rates low, that the market rates will still raise radically, especially because of the situation. If the stock market does stay low, where's your returns going to happen? You know, and the only way you're going to get returns is if you can guarantee a better rate of return. And since you can't cut interest rates anymore, how are you going to get your yields? You know, where's that going to come from? Your yields are going to come from the selling off, which means bonds are going to collapse. You know, so you're going to have people pulling on funds to try and buy into equity funds because they know that rates are going to go up, and they're only going to keep on losing money in the bond market for quite some time, or at least until we have them raised to a point to where we can cut again and ride, you know, at least keep things stable at some sort of stable low rate. But if we have like unemployment that shoots up and things like that, like they have to pump all kinds of liquidity into the credit markets. Eventually that's going to dry up, and once that dries up, then it's all over. Then it's all over. So these are big trends now that we have going on in the currencies. So we've dwelled on some of these lesser currency crosses, and we don't have really any points to tell you to go to anymore because we've blown through our targets. We just are saying right now the dollar is a bull. Don't fade it. We have to watch how the global news goes, you know. So that's really where we're at until tomorrow. We thought we had a couple signals shaping up going into today, and they evaporated. That's why we always say, like, don't try and jump in front of your signal, because like we had a sell signal in Turkish lira yesterday. Look at where that would have gotten you, you know. So with that, we're gonna go back to the euro US dollar. Remember the big dog that we have here that runs the dollar index. It has the biggest component. Well, it's still running on its lows too. So as we've been going through this webinar, we continue to batter the lows. So we will maintain our bearish posture going into the rest of the week, and we'll see how long we hang on to it with our stops, hopefully long enough to keep, if this trend keeps going, hopefully we can ride this for a little bit longer, you know. But as we continue to get into certain extremes, we're going to probably end up doing more option plays and then start filter, or at least as a hedge, to go with our Forex cash and also Forex futures plays as well. So we have been covering all these markets. We covered all the trends where we're at. We hit the points. There's not very many big points. I mean, there's pivot points to look at right now. But since we're on the extreme of these moves, there's really nothing we can go on right now. We have to just manage what you're in. And like I said, if you're trying to get in right now, don't try and fade these moves. Don't try and jump in front of a freight train. We're going into uncharted territory in the world right now, how we are working together. So how things are in there, and when things are happening so quickly and so radically that it's better that if you are not already in it and managing a trade, you know, look for viable options. Like I said, options, okay? So, but we also have rollover, so take into account that the next 2 weeks, you probably are going to get some bad pricing, so you might have to just limit your, you know, just because the market, you have an idea of where the market's going to go doesn't mean you're going to be able to pull off the trade and execute it. You know, that's one of the things that comes with trading. It's something that's hard to deal with, but that's a reality. And you want to preserve your capital, and once again, make sure that you're not, you know, just throwing away money stupidly in this kind of environment, because you can very easily get eaten alive. But while you're trying to figure out what to trade, one way you can do it is by reading the book High Probable Japanese Candlestick Patterns, available on paperback and Kindle version on Amazon.com. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And just to remind you of why you would want to read that book, we'll go right back to our screen real quick, and then let's go check out one last market again, the British pound US dollar. Remember when we talked about that? We talked about the bearish engulfing line, which was also in the euro US dollar. That was this. Look at how far of a move this pattern yielded. Had you been short and you had traded, you know, multiple different types of means and what have you, and you read the book, you'll see how you would have gotten to your trading zone and still would have had something left once you built up your war chest to ride a trend, because sometimes, you know, you don't want to take profits too early. There are always big trends to chase and follow. And when you get a hold of them, these are big moves that help all traders out if you remain disciplined, because then it can help take your trading to the next level. That's the one thing I always tell people. I'm like, if you're disciplined when you have moments like this is the thing that takes your trading to the next level, because you'll make more money off of a little bit of capital than you would on most of the capital you normally use. And then when things settle down, you're going to have a bigger capital base to work with. And then you'll be able to reassess your trading and scale into a way where you're like, oh my gosh, I'm making more money than I did before. This whole thing I survived. Not only did I survive it, I thrived in it, and it took me to the next level. So with that, good luck with that. Read the book, and always check us out at www.forex-trading-unlocked.com, or you subscribe to our YouTube channel so that way you can follow our videos and be aware of what's going on in the Forex markets. We'll keep you abreast, but remember, this is always in delay, so don't chase it, because this is just for educational and information purposes only.